Hello everyone, welcome to BHP Live, our online retail shareholder Q&A session. I'm here today with Andrew Mackenzie, our Chief Executive Officer. Welcome, Andrew.
Nice to be here, James. Looking forward to the questions.
Very good. We've had excellent interest in this session. Many shareholders registered, so thank you for that, and particularly thank you to those shareholders who've submitted questions. We've had plenty of questions, Andrew. I don't think we'll get through them all today, but we'll work through as many as we can.
Okay, I'll try and be as quick as I can on the answers.
Very good. Well, Andrew, it's been a busy couple of weeks. You've been in London. We've had the first of our AGMs there for our UK shareholders. How would you describe the conversations you had with our shareholders over there?
I think our shareholders are reasonably satisfied with where we are. I mean, we've just at the end of the full year in August announced a record dividend, fully franked, which has now, of course, been paid. That, I think, symbolises the strength of our company and also the optimism that we have for the outlook. I think that kind of a track record, perhaps up and down, is something that we can look forward to. I guess when was it now? It would have been at the end of in the middle of that week of October. We also had our operations review for the first quarter. That showed a little bit of a decline quarter on quarter in production volumes, about 3%. We expected that. Our petroleum business is somewhat in decline because we have a number of major projects that don't come on for a couple of years that will reverse that decline. And it was a high maintenance quarter, the first quarter from July to September, that took quite a few of our operations offline for longer than would normally be the case. But when you look forward and you expect less maintenance for the rest of the year, we expect that we will produce at least as much, maybe slightly more, than we did last year, and we're absolutely on track to make that. So we're walking into the year, running into the year really with good confidence.
All right, thanks, Andrew. We'll get straight into the questions now. The first one is one that we've all read about in the news recently, the terrible unrest that we're seeing in Chile. We've had a number of shareholders asking what the impact is on our operations and our people.
Well, I mean, thank you for that concern, the shareholders who asked that. I mean, it is a very important part of our business, and we were very surprised when things seemed to, if you like, flare up with very little notice. So far, the impact on our business has not been great. We've had one or two short sympathy strikes, which haven't really disrupted production to date. But more broadly, we hope that the country, with some new policies, can come back to normal. Because whilst it was at its worst, we struggled to get everybody to work. And people were concerned for their homes and their families, particularly when they were away with some of the violence. Of course, people were killed and a lot of people were injured. There seems to be a bit better development since, but it's still a little bit fragile. I happen to believe that the decision not to have COP25 and APEC in Chile is a good one. I think it was quite brave of President Piñera to make that decision to I think, in some ways, take a risk with his international reputation in the interest of keeping the company calm and dealing, I think, in a mature way with the disagreement that has surfaced as a result of these things, and giving all of the citizens, including our employees, time to work through it.
Okay, well, we've got a question from Emily here. One of our projects is a major copper project in Chile. Emily asked more broadly across the projects that we have in development, how are they tracking and how do we decide which projects to invest in?
Yeah, well, I mean, our projects we have 6 major projects, and they are very much tracking on time and on budget, including the Spence Growth Option, which is our major Chilean project. We've recently added the last project, which is Ruby, which is an oil and gas project. That's a project that is on the smaller side of our major projects, just into the $250 million that counts as a major project. It's closer to 300. That's in Trinidad and Tobago. Yes, the Spence Growth Option in Chile is going well. It's very much on track and on budget. And likewise, we have South Flank. That's a much bigger project, $3.6 billion. That's about 50% done. And it will be producing iron ore for the first time sometime in the 2021 calendar year. We have lots and lots of other projects, small projects, brownfields projects, things that extend and improve the productivity of our existing operations. But all of them go through something we call the capital allocation framework. That allocates in all of our discretionary capital between what we might invest in new projects, the ones I've just described, what we might put on the balance sheet, and what we might pay as a dividend to our shareholders. Right now, our balance sheet is strong, and we're within our range, actually closer to the bottom end of the range that we target. So we don't need to top that up. So it's really a choice between how much we pay to the shareholder and what we invest in the projects. We've said that for now we don't need to invest more than about $8 billion a year in order to, if you like, maintain the growth of our company in line with our market share. I don't see that changing anytime soon. And but within that $8 billion, though, we have lots of competition, healthy competition, because we have generated a lot of optionality, which I think means that we can boost the overall returns of the portfolio, which will affect the share price and obviously the cash returns for the shareholders in the future. So yeah, it's all going well.
All right, Andrew, some of that capital goes to exploration every year. We've had a lot of shareholders ask for an update on our programs and how successful we've been.
Well, we mainly explore almost exclusively for oil and for copper, and we have positions in some very prospective parts of the world where we think we can add significantly to our resource base. And this is the most cost-effective way to do so, by finding your own new deposits and new oil fields. And that's going well. I mean, there's a lot of highlights. I just pull out three. In oil, you know, we've taken a operator position in Trion, which is a partly discovered but underappraised oil field in Mexico. As we've gone about appraising it and doing a bit of exploration in the region, it's turned out to be bigger than we thought we had, and it has more oil than gas, and we prefer oil to gas, so that's good news. In Trinidad, we've just completed a new phase of drilling there in the northern part of where we hold there, and we've confirmed that we do have a very large gas field, which we will be the operator of and the majority holder of. And it's close to a large LNG facility that is short of gas at the moment, so that's looking good from a commercial point of view. We have a similar spread of activities in copper. I think the one I would draw the shareholders' attention to is Oak Dam. This is a fairly large discovery we've made to the south of Olympic Dam in South Australia. We're continuing with more detailed appraisal at the moment, and that's going well. We're having long intercepts with very high grade. And you know, as we firm up the size of it and how we think this can be developed in the future, of course, we'll let our shareholders know.
All right, well, I'm going to take a question here from Michael. Obviously, there's a very interesting relationship between the Australian dollar and US commodity prices, particularly for Australian shareholders. Michael asks, with the Australian dollar falling, should that result in an increase in returns back to Australian shareholders? And he also asks, he queries, why is the share price been trending down over the last few months?
Well, all things being equal, Michael is right in the sense that, you know, our commodities are priced in US dollars, but about half our operations are in Australia. So if the Australian dollar is a little bit weaker, then that increases the margin because our US dollar costs become less. But there's so many other factors that affect our margin and affect people's view of the share price than just the Australian dollar. For example, people take a view of the current economic outlook. And I would say that there's a number of people are a little bit nervous in the medium term in particular about what the impact could be of some of the trade dispute, particularly the ones that are happening between the US and China. And this is having had an impact on some of our prices. Commodity price is another thing that affects our margin and therefore affects people's views of our future dividend stream and therefore how they would value the shares. Because I think of trade worries, we've seen a slightly weaker demand than we would have normally expected for copper, and copper prices is lower than had this not been there we would have said should be the case. Conversely, the iron ore price is a bit higher than we expected for a number of reasons, whereas things like metallurgical coal and oil are more or less where we thought things would lie. Shareholders may have different views than we think on long-term prices, and that affects things. So it's a complex issue, and it's not just an Australian dollar play.
And of course, the recent dividend in Australian dollar terms, a record.
Yeah. Oh, yeah. I mean, I should say. As an example of the strength of the company, your shareholders are enjoying very strong cash returns. Have done so now for some years, and we've had including buybacks, and that culminated with a full-year dividend, which was a record. And for those listening, it's fully franked.
All right, we've had a few questions on Jansen, that's BHP's potash development option in Canada. I think most of the questions are narrowing in on the money that was approved 2 weeks ago for further development work there. Shareholders have queried why have we allocated more capital to that project when the board hasn't yet approved its ultimate development?
Yeah, it's a good question. It's a fair question. There's a couple of things that are not quite ready for us to move to full sanction. Most importantly, we don't yet have a port option. We've got a number of, we do have some port options. We haven't made a choice as to how we're going to export the potash once we mine it. And we'd like that to be sort of signed off so we can fully cost the project before we go to full sanction. We've given ourselves, and we have about a year, at least till February of 2021, before we really should make a decision, either to go strongly into sanction or to maybe take a pause while we wait for the market to firm. In the meantime, we will fix where we're going to use as a port. We'll also complete the lining of the shafts on a permanent basis, which means that we can then pause for a period of time with not much money and safely wait until the market is ready. But I think you should read our willingness to do a bit more engineering, a bit more de-risking by doing some construction at the bottom of the shafts and spend $345 million on that as evidence of the growing confidence at board level that this is the right kind of project for BHP. It's one that we should be very seriously considering sanction within a year's time. And it is a good medium and long-term option. We've got security of tenure over a very large resource. We think it's the best in the world in potash. And potash is a commodity that we think will do well, in the later decades of this century, and is a diversification away from fossil fuels, for example. It's actually a bit of a diversification away from having mainly China as a customer, and so we like it on both counts. And we're just continuing to work and improve the economics and get everything right before we really have to ramp up the spend or take a pause. And we've given ourselves until February 2021 to make that decision. That's probably enough on that for now.
All right, well, Andrew, you mentioned earlier some of the macro forces that may be influencing BHP's share price, commodity prices. A lot of shareholders are focusing on the US-China trade tensions, and they're keen to understand if we've seen any physical impacts to demand flows for our products.
Yeah, well, probably not physical impacts as yet, although, as I said earlier, there may be a knock-on effect on the copper price and therefore some copper demand. But our other main flows into China have continued, and they go mainly into products that aren't sold into the US anyway. And we've actually seen a bit of stimulus that's coming off now within the infrastructure side of China, which they probably put in place partly to mitigate the impact of potential trade sanctions and trade wars. And that has increased the demand for steel, less so for copper, which is why we've seen less movement in that copper price. And that has definitely improved the price of iron ore, as well as sustaining our volumes, and has put a bit of a floor under the met coal price. Another thing that helps boost the demand at the moment for those products going into China is that relative to using the Chinese domestic supplies of iron ore and met coal, our products allow them to operate their steel mills with much less environmental damage and impacts on air quality.
All right, we've had a couple of questions here, Andrew, relating to steel. The first of which is from Brian. He asks whether or not BHP could potentially become a steel manufacturer again. And then we've got one here from David who asks if there are any plans at BHP to transition out of metallurgical coal.
Okay, I'm not quite sure where David's question on met coal has come from, but let me come back to that. No, there are no plans, Brian, I think it was, for us to go back into steel. We exited this business through demergers in 2002, and one of them is now BlueScope Steel. We are very happy with that move. It's been a steady move to simplify our portfolio and have that portfolio mainly based on the sort of geological end of the business, getting product out of the earth and then into the world markets, and doing less further downstream in the processing of those products. So I don't expect us having any change of heart on that for some time. On met coal, I guess behind that a little bit is the concern that might be associated in some ways with global warming. It is, in the sense that met coal plus iron ore gives rise to steel plus quite a bit of CO2. But much of that CO2 comes from the oxygen in the iron ore, as it does come from the carbon in the met coal, and there is no substitute. Unlike maybe other forms of fossil fuels, where longer term you could see them being replaced by things like renewables, there is no yet viable substitute for using met coal along with iron ore to make steel, and the world is clearly going to continue to need steel. We just have to work, as we've said we will do, with our steel customers to see if we can't reduce their emissions of CO2 in a number of ways through the way in which they operate their steel mills. And and back in July I made a commitment to do that. But meantime, it's a good business for us, and for all the reasons of demand I've explained there. But unlike iron ore, as we start to see the growth of India. India is now the second largest steel producer in the world after China. It has none of its own metallurgical coal. It has to import it, and it would probably prefer to import, all other things being equal, our metallurgical coal, which is of a quality that benefits the environment and benefits the efficiency of steel mills. And so we see it as a very important part of BHP's future.
All right, we're going to stick with coal, but specifically thermal coal in this case. Russell's asked, what's our exposure to thermal coal mining? And he also queries if we're concerned about expected demand falls that will result from the government's move to transition away from coal-fired power around the world.
Yeah, well, our exposure is small. It's only about 3% of the portfolio on an EBITDA basis. The demand for energy coal is likely to continue to grow for at least another 2 decades, and then it may, on some forecasts, start to turn over, and that's because people are, as is hinted, shifting out of coal into other forms of energy in order in which to generate power. But it's a steady shift, and one that can't happen too quickly, or we're going to get real problems of reliability of supply and indeed cost of power and electricity. And so that gradual transition, and even if the demand turns down a little bit from 2 decades since, there'll still be multi-decades of transitioning ahead of us in order to move completely out of coal in a sort of viable way. All that said, I mean, the net effect of that is that the demand outlook, or the growth in demand outlook for when you take the long-term view of energy coal, is not as compelling as our other products. So we're not likely to invest much beyond our current footprint in coal, which is relatively low cost and therefore will be viable for quite some time in our view. But we're not likely to invest in that. The returns are going to be much more compelling in our other businesses, like copper, potash we've spoken about, oil and gas, and potentially a bit of iron ore and metallurgical coal.
We touched on a few commodities there, Andrew. I'm going to take a question from another David, who he wants you to do a little wander through the periodic table of the elements. He asks, what are the top 10 resources that BHP wants to own in the next decade? And there's a specific question about bauxite and our interest in that commodity.
Okay, well, I can't quite get to 10. We, as I mentioned earlier in the question on steel, we're trying to focus the portfolio. not just towards the geological end of the business, but also into those commodities which we think there's a degree of geological difficulty or engineering difficulty that we are uniquely placed to deal with within BHP. That means that we predispose ourselves to higher margins, and those are margins, because of this sense of difficulty or scarcity, tend to concentrate more rent at that end of the value chain rather than further downstream in the processing parts of metals and other commodities that we might mine. And so with that kind of lens, and of course we also want to make sure we have very large tier 1 ore bodies to serve these markets. We're very comfortable in our chosen top 4 or 5, which is iron ore, metallurgical coal, copper, oil, and potentially potash, which we spoke about earlier. And then maybe 3 others worthy of consideration. We've kind of fallen back in love with nickel. And chose to retain Nickel West because we see this as potentially quite an exciting commodity for batteries, and the demand for them is likely to explode in the back end of the next decade. And nickel is one of the least substitutable metals that goes into those batteries. I mean, electric vehicles are also very good for copper, by the way. You can't be in oil without having gas, and we've made a big gas discovery in Trinidad I mentioned earlier. We had hoped to find oil, but fortunately the gas is easy to commercialise, and so we can make money from that. And so you have to accept a position in gas, and we have a lot of gas in our portfolio as a consequence of that, because there's actually more gas sloshing around the world, if we can put it that way, than there is oil. And so you are, on balance, more likely to find that than oil, and you can't quite discriminate what you like to find that easily ahead of drilling things. That becomes number 7. And then number 8, energy coal, we've already spoken about. It probably is at the back end of things. I mean, because of its outlook, but because of the strength of the assets that we have in that, it deserves to be included in the list. Bauxite, no. Bauxite, of course, is the precursor to aluminium. We had a lot of bauxite, we had a lot of aluminium business, which we put entirely into South 32. A lot more of the rent there is downstream in refining and in smelting, similar to steel making, and so we would, to be consistent, choose not to be in that business. And bauxite itself is a very prolific commodity. There is no scarcity, and the mining of bauxite is relatively straightforward, so it doesn't earn a big margin, and therefore we don't think it would ever compete for capital alongside the more interesting commodities that we've retained in BHP. And so I like steel making. I don't see us going back into bauxite for a long time, if ever.
All right, well, this is a topical one, Andrew. I know you've had a number of conversations with shareholders around the world on this issue. We've had a lot of questions on industry associations, our membership of industry associations. Shareholders have questioned, what's our approach when we're a member of an association that has different views to those of BHP?
Okay. Well, I think there's 2 parts to this question. Is, what do industry associations do, and then effectively, answering directly the question you've just asked me. And we join industry associations primarily not for advocacy, but to share best practice, particularly in areas of health and safety and the environment, where we don't choose to compete. We want to raise the track record of the industry's performance in keeping the workforce health and safety, looking after the environment, and also I think some of our social obligations with communities, because that increases the acceptability of our industry. It makes a better world, which is a good thing, and therefore, all things being equal, it makes us more investable by being in a more acceptable industry than we would be if that weren't the case. And so we'd be very reluctant to lose the opportunity to do that by not being able to join trade associations. Now, inevitably, some trade associations stray a little bit into advocacy. We have a fairly kind of strict rule about that we don't have to agree entirely with them, but if we feel that their advocacy is taking away from our position and that we're funding that, and that has a bad impact on the reputation of BHP or our ability to perpetuate the things that we are prepared to advocate on our behalf, then we have to understand what the cost of that is to us relative to the benefits. And in order to make those decisions, we have an annual review. We put this in a few years back, and as a result of that, we chose to leave the World Coal Association because we felt that their position on global warming was sufficiently weak that it was detracting from our belief that the science is real and that something needs to be done about it. And I think investors respect that. And we'll continue with that review, and everybody's included. It's normally concludes around December time, and then we tell everybody what's going on. And if we feel that we've lost control over a trade association and it's advocating in opposition to the things that we want in a way that's on a cost-benefit basis is not working for us, then of course we would choose to leave.
All right, well, I've got a question now from Susan. It's quite a specific question. She's focused on the gas market in the east coast of Australia, and she wants to know what are BHP's proven and probable gas reserves in the Gippsland Basin?
Well, I don't have the numbers in my head, James, but I can give you sort of directional feel to that. Of course, it's the production of Bass Strait, which is operated by ExxonMobil, and they have suggested they want to share their stake, but we're still 50%, has been critical for gas supply, domestic gas supply, all up the east coast. This has been around for many decades now. I think probably over 50 years, and and a lot of the fields are now in decline. I mentioned a bit of that earlier. We kind of arrest that decline a bit by some investments in new fields or brownfield developments. You might have heard of West Barracuda and some of the work we've been doing in Kipper and Kipper compression. But there's only so much we can do. And by the time we get into the middle of the next decade, we'll start to see that decline accelerate. And if gas demand is static or growing in Eastern Australia, then we're going to have to find other sources. That's not something that we're chasing as a big business opportunity, if I were being honest. We see better opportunities elsewhere we've already discussed, and so it'll have to come from others and their ability to explore near to the market and develop. Our main future gas development that we're looking at the moment is Scarborough, which is over in the west with Woodside, but some of that might end up as domestic gas in Western Australia, but the majority of that would be exported because Western Australia is a small population state. It can't use as much as, if you like, as Eastern Australia requires.
All right, well, look, we're nearly out of time, Andrew, but we have had a number of questions on Samarco. We are approaching the 4-year anniversary of that dam disaster in Brazil. Could you give us an update for shareholders on where we're at with the compensation process, the rehabilitation process, and also a lot of shareholders have reacted to the seemingly positive news over the weekend about potential for a restart there?
Well, maybe I'll do with that first. I mean, it is positive news. We're excited about it. We have all the approvals now to restart the operation, and the way we're doing that, we're still working on it, and obviously when we get that finalised, we'll tell everybody. It's about a third of the previous operation, and it will be entirely based on dry tailings. So instead of the old tailings dams that one very sadly failed, we'll have a dry material that can be stacked in a disused pit. It's called Alegria Sul, and that will allow us to fire up one of the 3 concentrators that Samarco has, and restart production, in a year or so. And so that's good news because there's a lot of people depend on the livelihood of having a job with Samarco, and of course we'll generate some money that we can use to carry on with the very important work that you've just discussed. On remediation, that's gone well, and certainly when you visit now, you could almost believe there hadn't been the disaster in the first place. We've had a lot of the water qualities checked, and it's as good, if not better, than before the disaster occurred, and it's been certified as being safe to fish and to eat the fish from it. Not all of the fishing bans have been lifted for other reasons, but hopefully they will be soon, because there are a lot of fishermen who depend on that. I think rough numbers about 15,000 families. On resettlement, that's also very important. People who lost their homes as a consequence of the disaster. Everybody whose house or business could be reconstructed in the same place is back, particularly in towns like Baralonga. But we have 3 settlements, villages Bento Rodriguez, Paracatu, and Gestira, where we're going to build in a different place. So in the very unlikely chance, we hope it will never ever be repeated, that a dam was to fail again, they would be much safer than where they were previously. That has involved a lot of permitting. You've got to clear new land. You've got to get the permission to build new towns. That's taken a bit longer than I think we'd have wanted, but we're pushing ahead, and everything is going well now, particularly at Paracatu. A bit slower at Bento Rodriguez, and the smallest one, Gestira, is probably the slowest. But we're underway. Many of the homes have been permitted. A lot of foundations have been put in place. Infrastructure has been built. The third thing is compensation. I mean, a lot of people lost money or suffered as a result of the disaster. Those who really felt it, those who lost their livelihoods, lost loved ones, lost their houses. And there's over 10,000 of those, and they, I think they have been compensated to date, and we moved in very quickly, of course, with initial assistance, and then we looked at all the claims and addressed them. And then we have a much larger group of people, some who just lost water supplies for a short period. And we've selected 260,000 of those, and there are more claims related, similar things that we're working through in order to provide appropriate compensation. And it just takes time, because as you say, a very large number, to make sure who are the genuine claimants and how we address things.
Okay, well, look, we're up on the half an hour, Andrew, but we can't let you finish without giving the shareholders a glimpse of the outlook that you see for BHP in the months and years ahead.
I think the outlook is very strong. I mean, come back to the fact we've just paid a record dividend, fully franked. That's a sign of this, how we're performing to date, but also the confidence that we can continue, more or less, that performance into the future. I've spoken a lot about some of our options for growth. But one of the most important ways in which we can, if you like, grow returns to the shareholder, grow the value of the shares, is our transformation program. That's a real investment in our people. We have centres of excellence which are becoming very strong in things like maintenance, engineering, geoscience, and projects. And then we have a raft of things which use a bunch of innovations and technology to really lift the performance of every individual asset of our company, drive down their costs, and at the same time maybe add incremental volumes. And that gives me a lot of confidence going forward. Our balance sheet is strong, so even if we are affected in some way by some of these trade issues we've discussed, we're designed to handle that well, and possibly even take advantage of some of the opportunities that only come in a downturn. So I'm optimistic for the future, and not least because of all our products as we look forward into a world of higher population, increased living standards, more decarbonisation, electrification, industrialisation, urbanisation. The kind of commodities that are needed for that are the ones that we produce, and what I think will be at a very competitive cost.
All right, thanks, Andrew.
You're welcome, James.
And thanks to all the shareholders who've registered for today's session. Thanks for all your questions. I'm sorry we didn't get through them all, but Andrew and our chairman, Ken Mackenzie, will be in Sydney next week for the BHP Limited AGM. That's on Thursday, so we look forward to seeing you all there and continuing the conversation. Thank you.